Hey everybody, Jeremy here coming at you with the Sunday Market Bias Report. It is Christmas Eve, Sunday, December 24th, and just wanted to do a real quick video this week. So we're going to dive right in without much ado. First off, looking at the heat map from this previous week, you can see that overall our call of going into rotation back towards the major tech sector did pan out. Google up 6.6%, Meta up 5.5, Amazon 2.3, Microsoft, Adobe, Oracle up 1% or 2. So continuing to see strength come back into those major areas of the market. I'm guessing that is probably going to continue here throughout the rest of the year and early into next year. But also really interested in rotation into the Russell 2000. And we'll talk about that when we look at the Russell's chart. Going out to the week ahead for economic reports, really light week. Obviously, Monday, December 25th, tomorrow, there's going to be no trading. The market is closed for Christmas. So we will be jumping back into trading on Tuesday for a shortened trading week and the last week of the year for trading. Wednesday, Thursday, Friday, we have just a couple of important economic data points coming out. Unemployment claims, pending home sales on Thursday, Chicago PMI on Friday. I'm not expecting any of this to really move the market one way or the other. I think it is going to be a technical week going into this week to close out the year. So with that, let's dive into the charts. Looking at the S&P 500 futures, obviously have been riding the 9 here in a really strong trend for a while now. Basically going back, let's see how many days ago that was, 56 days, so almost 2 months of just virtually straight up. Still seeing overextended on the RSI. We are seeing a slowdown in the momentum on the MACD here, so I'm not going to be terribly surprised to see this take some time off and go sideways. I would love, honestly, to see this break the 9 and come back down and test this diagonal red support and resistance line that I have drawn, or even come back down into the 4,700 level and let this 20 period moving average come back up and catch up to it around 4,700 to find support. With how bullish the market has been going into the end of the year here, and with the low trading volume that we typically get the last week of the trading year here between Christmas and New Year's, I don't honestly know if we are going to get that pullback or not, but I would not mind it. So anyways, if we do get a pullback down back into that 4,700 level, I will be looking at that as a buy opportunity going into next year. Or if we get a breakout above the all-time high here of 4,830 and 75 cents, a breakout of that level with a close above that level would also be bullish for the market. Either one, I'm not going to complain. Like I said, I would actually prefer to see a pullback here and take the last week of the year off and set up a nice breakout come the first week of next year. But we don't always get what we want, and we have to trade the charts that we see. So if we do get that breakout of the 4,830 level, there is playable action there and basically clear air above because we are at all-time highs. Ding to that all-time high. And, again, this weekly chart kind of supports why I would like to see a pullback. We've just green all the way up the last about 2 months on the S&P, and it is in need of a pullback. That 4,700 level looks really good to me. So a week or two of pullback into that would be fantastic. Going out to the daily chart on the NASDAQ real quick, very similar picture. We put this out to a weekly chart. You can see we put all-time high. Wouldn't mind having a pullback into the weekly rising 9 EMA here around the 16,000 to 16,100 mark. If we drop that into the daily again, you can see that we were overextended and are just in the process of kind of coming back into the territory under that 70 RSI mark that is classified as not quite as extended. Slowing down on the MACD in terms of momentum as well looks to me like it is fairly exhausted, and even with the big tech names like Amazon and Microsoft and Tesla and Google doing really well right now, I just don't know if I feel like there is enough oomph in the market to make that next leg higher here without a little bit more time off. So again, seeing the next week off, the next 4 days of trading, since this is a shortened trading week, taking it to just have some sideways action or a little bit of a pullback and resetting our risk to reward and giving us a nice start to the market next year is what I would personally love to see. The one area, like I mentioned on the heat map, that I'm really interested in is the Russell 2000. And this weekly chart shows why. We have struggled to break above this level since really going back, 18 months now, basically. And that is a very important resistance level that we have officially on the weekly chart closed above. Looks like we are basically a stone throw away from testing the previous high that's about 100 points higher than the closing price on Friday there. I don't see anything that says that we should see anything but a continued rally up to about 2130 on the weekly chart. On the daily chart, we are overextended. We did attempt to break out of this level, but we had this kind of wick nonsense going back a couple of days on Thursday last week that I don't particularly love. This would clean itself up a lot to actually take the next 4 days off of the trading week this week as well. Just go sideways, go nowhere, and then line up a breakout above that, 2050, 2075 zone right here to move back up to the next level starting the next year. So looking for a little bit of time off here as well on the Russell 2000. If we go out to crude light's starting to get interesting. You're going to hear me say the same thing over and over again. I would love this to take some time off. Give us the last week of the trading year without moving any higher. Give us time for this 9 EMA to really establish itself above the 20 on the daily chart. It crossed actually on Friday. But I would love to see that just kind of play out a little bit more, let that 20-period moving average really go sideways and show it being truly neutral instead of just a pause on the downward momentum here, and then line us a breakout above 75. If we get a couple days off to end the year here, a breakout above that 75 level, playing back up to 77.5 looks like a really good potential trade setup in the energy space. So putting some energy towards the energy sector, pun intended, to just go nowhere for the next few days and then line up a really good trade to start the year. Going out to Bitcoin. Bitcoin's chart's been a little bit messy here at the top end of the chart. Last week I said that it felt like it was tired and needed to take some time off. It has taken some time off. This was Sunday's candle back here, Monday, Tuesday, Wednesday, Thursday, and Friday. So, we haven't gone very far since then. We're still definitely within our breakout range. We have kind of a little ascending triangle pattern here that we need to break out of. And honestly, again, I would love another couple of days just between these two diagonal support and resistance lines to let the moving averages catch up, act as support, clean this up a little bit, and then line up either the breakout of that diagonal support or the ultimate breakout of the 45 to 60 level. So that's kind of what I'm looking at for the next leg higher. If we do get that breakout to the next leg higher, 47,500 to 48 should be pretty easy to achieve, and we might even get higher than that, up to about 50,000. So those are kind of my three targets to the upside on that. On Ethereum actually did break above its diagonal resistance here, but it got kind of stuck on the horizontal resistance from this previous candle here. So looking for a break above that level. Currently at about 2350. If we can get above 2,350 there, just a stone throw back up to all-time high, and then lining potential breakout up from there. Going out to gold, tried to break out, had some good momentum earlier in the day, but closed back down basically right on top of the previous consolidation range here. I would not mind playing a breakout on gold here. Let's check the intraday to see what it looked like. And intraday didn't do anything wrong, pulled back and just snapped back to the 9 EMA. So I would even potentially be comfortable triggering in above this candle here around 2070. And I'm going to go ahead and put an alert for myself there to potentially take a trade in gold this coming week. Going out to silver, very similar thing, tried to break out, came right back down. honestly, this chart's a little bit messier just because the 9 EMA is still underneath the 20 period SMA here on the daily chart. I would love to see this go nowhere for another day or two. Let that 9 EMA get above the 20 and then signal in a breakout above these candle wicks right here. And then let's look at our market internals. We haven't done that for a while. So we've been solidly bullish on our market internals here, really going back a couple of months. It's about 49 days ago, we got our second bullish candle in a row, which is our signal to go bullish in the market. So for the last 49 days, we've had a bullish posture. Nothing changing here. The momentum has slowed a little bit, but that's to be expected when you get overextended. So that is still confirming a bullish lean in the market. And then same thing with our advanced declining issues here. Positive slope to the moving averages here, still closed solidly in the positive, showing that more stocks are moving up than stocks are going down in the overall market. So that's bullish. And then finally, if we look at UUP, UUP gapped and got clobbered this last week. And I'm actually kind of surprised we didn't see gold do more of a move on that. That is a shocking candle to me, and almost to the point where I'm wondering if my charting platform is displaying the correct data, because that is a huge drop for UUP. So I actually feel like I might need to go back and double check this, referencing it against another charting platform to know if that is actually what happened. Because if it is, that is pretty shocking to me, and signals that we're probably going to see the euro US dollar cross pair. Where are you? US dollar cross pair. Yeah, actually, so that would support a nice breakout here on the euro dollar and dollar cross pair, and really nothing stopping it from bouncing back up to that 112, 113 area. So that's actually a potential interesting play for anyone that does currency trading. And then finally, let's end on the VIX. The VIX still really, really low. This means that put buying for insurance on your on any instruments that you own stock in might be a good idea to start looking at. Puts are likely very cheap, and you can buy a put to be the insurance on your stock positions instead of having a stop loss to tap out of the position, just profiting from the put if we do get a pullback in the market. So for anyone that does option trading, looking at puts this week might be a good opportunity to hedge our bets going into 2024 and just make sure that we don't have much downside risk for whatever pullback eventually happens when this trend comes to an end. Not saying that's going to be this week, not saying it's going to be next week, but being prepared with our insurance policy on our market is how you make money with it. Because if you buy insurance after you already need it, it is way too expensive. So buying it when it is cheap is the way to go. So anyways, that's my thoughts. Trade safe, guys. As always, let me know if you have any questions. I am here to help, and enjoy the holidays and time off. Till I catch you next time.